So first, let's rewind back this trade. Now, instead of waiting for the Parabolic SAR to switch positions before exiting your trade, you can instead set a stop loss at the Parabolic SAR itself. So if you enter a long position here, you can set your stop loss below here at the Parabolic SAR. And for your profit target, you can set it at 1.5 times your stop loss. And then, all you need to do is let the trades run until the price hits one of the target. And as you can see, using this exit strategy actually results in an earlier exit signal compared to if you waited for the dot to switch positions. Now, there are times where the Parabolic SAR is placed too far from the candle. Like in this example, here we can see that the Parabolic SAR is positioned way below the candle, meaning if you set your stop loss all the way down here, you'll be risking a huge amount if the trade ends up being a loss. And so if you think that a stop loss is placed way too far like this, you can just adjust it depending on your personal risk tolerance. Now moving on. The next high win rate strategy that you can use with the Parabolic SAR is by using it to find divergences. So first, what are Parabolic SAR divergence? So a Parabolic SAR divergence is when the price is moving in the opposite direction of the indicator. Let me show you an example. So usually, if the price is heading upwards, the Parabolic SAR will follow that direction and also head upwards. Similarly, if the price is heading downwards, the Parabolic SAR will follow that direction and also head downwards. However, there are times where they move in the opposite direction instead. Like in this example, you can see that the price goes down, but the Parabolic SAR is going up. This is what's called a divergence. And usually, when a divergence has been formed, it may indicate that the trend will form a continuation, therefore giving you a possible trade opportunity. So here's how the strategy works. The first step is you want to find a divergence, and to make it easier to find one, I like to change my chart type into a line chart. Next, you want to find instances where the Parabolic SAR is moving in the opposite direction of the price. Like in this example, here, we can see that the Parabolic SAR is heading downwards, but the price is heading upwards instead. And so this will be your divergence. Now, the question is, how do we know if this is a bullish divergence or a bearish divergence? So to answer that question, you simply need to look at the direction of the price as the divergence is forming. So in this particular example, we can see that the price is heading upwards, meaning this is a bullish divergence. Now the next step is waiting for your entry signal. So for your entry signal, after the bullish divergence has been formed, you want to further confirm the bullish momentum by waiting for the Parabolic SAR to switch below the price. So once this happens, you enter a long position. Now for your stop loss, you can place it at the Parabolic SAR and set your profit target at 1.5 times your stop loss. So let's look at another example. Here, we can see that the Parabolic SAR is heading upwards, but the price is heading downwards instead, meaning we just found another divergence. Now, since the price is moving downwards as the divergence is forming, it indicates that this is a bearish divergence. Next, for your entry signal, you want to confirm the bearish momentum by waiting for the Parabolic SAR to go above the candle. So once this happens, you take a short position. Now for your stop loss, you can place it at the Parabolic SAR and set your profit target at 1.5 times your stop loss. And as you can see, this trade ended up being profitable.